The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. It's Monday morning in the U.S. Got a big week here, and we've had a huge rally, as if nobody knew that. Let's take a look at the ruble. We've been talking about this, probably the best trade on the books for quite a few reasons, technically and fundamentally, and it's in the nosebleed section and may go a little higher. Putin's got a big ego, and we need to pay attention to this trade. Now it's up in the 42.26 area. 39, we talked about 50 might be a foregone conclusion. I don't see, with stops in force, this being a bad thing to jump on the bandwagon with. It's just technically looking super simple to kind of follow along and let the 240s trail up here. So again, the ruble, my favorite situation out there right now, and I'm not going to not keep talking about that. So again, let's take a look at the yen. A couple of things to look at here. We met some targets. That 108.39 rounded off, hit it, backed off, hit it again, backed off. That's actually indicative of we may settle back a little bit here. Try to get past that 2-3 times there, and that was the target from 105.44, the last dig-in point on the long side. And how do we trade this now? Actually did the free video on the yen this time. 107.18 may be a good area to wait for to pick a battle on the long side. I do not see this as a short candidate, folks. So we're going to kind of stay away from this on the short side and try to look at the inflection points to pay attention to from the long side. And I'm going to scroll down here. We're going to bring Eric on in the second segment. He's got a lot of interesting things to say about the rails sector, and we're going to follow a couple of instruments here. But as we kind of cover the usual suspects, first and foremost, the dollar. Again, similar situation to the yen, kind of trying to pick the battle twice up there and get above, a close above. We talked about waiting for the yen to close above that 108 and some change areas. Similar for the dollar. So you've got breakout closes, again, above 85, 86. Let's just round it off. And then some buy points down below. But, again, not seemingly wanting to do that right now. A couple of things going on involving some international markets as we talk about the currencies. The Bovespa, very ugly situation there. And reasons being, I'm going to scroll down here and take a look at that. Reasons being, the election's finally confirmed. Where are we at with the Bovespa? I was looking at it a while ago. Where are we at? Here we go. We're down over 4,000 points on the Bovespa. Reasons being that, kind of a socialist situation has developed and been confirmed. The elections did not go the way that the financial markets wanted them to go. And here we go. This is the situation on the Bovespa. Close below, go back and retest that 53,000 general area, and now we're just sitting in the toilet down here. Now, this is really concerning from a fundamental standpoint. Got a lot of friends in Colombia, and they are kind of noticing that the wave may be pointing that way. In Venezuela, you had a lot of the elitists and people that could actually kind of foresee some things and try to get money out of the country, move a lot to Panama. You got a similar situation developing in Brazil, and you've also got something that may be contagious down in Colombia. So something I'm going to kind of keep my eye on. Got a lot of friends down there, and they're getting a little concerned that the former wave that was moving forward may be ending, and the tide may be turning, and it could get a little scary as far as not going full blown Venezuela, but just some things shifting around. And we're going to keep our eye on that currency. It's not a widely traded currency, but we're going to continue to look at that. The situation on the Australian dollar, I like this from the short side. Again, we kind of got a range-bound situation down here, but I really like the way this is kind of churning. I don't look at this as a bottoming formation. I look at it as continuation. So, again, selling 88 neighborhood resistance and selling breakouts below 86.92 down below on the Australian dollar. I also want to mention, German business confidence is down. They're kind of the tide is turning there. We're going to look at the DAX in a second. Italy stress test. I'm sure you read about that. Not good. We're going to take a look at the FTSE MIB down here. If anybody wants to, let's take a look at this. FTSE MIB. Let's see, this is our weekly here. Some immediate downturns here. Let's see, just based on that alone, our 240s tailing off here. Interesting situation. Italy, we reached resistance up there. We're coming off. The current price of the MIB is 19,160 approximately. So, again, top of the box, selling point there, resistance at around 19,638, support at 17,975 on an intermediate basis. But an interesting, I was in Italy a couple of years ago, and we've got a guy there, a very good friend of mine now, Franco Della Pina, and he's, I didn't know much about Italian politics and, what really drives the country and, what the thought process is internally. You probably think from just listening to the stories that are out there that, Italian debt's bad and blah, blah, blah. But the northern part of the country blames the southern part of the country. There's a big, push to try to separate that country into two halves. And, he told me a story. He said, he lives in the Umbria, Tuscany area, and that's where I was at with him. He's got it's just a gorgeous, if you ever want to go somewhere gorgeous, go to that part of Italy. Go to Italy 3 times before you go anywhere else in Europe, by the way. It's an incredibly beautiful place. But maybe that's kind of spawned the idea that let's just enjoy the area and not work if we're citizens. I don't know. But, he told me a story. He went to Naples. They were going to put an office there, and he had, really kind of shied away from the South his whole life, really, because, he considered it, land of the mafia and just a lot of, they have a big part of that country in the South that's, taking support from the North, basically the Milans and the Romes of the world. And he told me a story. He said, we tried to put an office there. We had an office, and there was, our water well was out back, and this old guy came by who had a tool belt on. Looked like a regular guy and just nice, courteous. He goes, I'm here to fix your well. And Franco said, what are you talking about? We don't need any help with our well. And the guy came back again the next week. Hey, I'm just heard your well was having problems. I'm here to fix it. I said, get out of here. We don't need you. The next week, the well exploded. And that was just kind of a tip-off to, hey, you need to pay off the local contingency to not have your well blown up, I guess. And then they moved the office and got the heck out of there. But I was laughing so hard when he told me this story. But that, that's kind of the feeling that a lot of people in Italy have that are in the north about the South, and it's a weird situation to say the least. And now the stress tests here are not being passed in Italy. So before we bring Eric on, let's take a look at the S&Ps. We've tried to look at this from a short standpoint based on market rhythm. I think we rallied just as fast as we went down. This is just unbelievable. But, hey, what can you do? We're traders, and we try to pick battles and put stops in. And we talked about the latest battle being the 1955 area, the weekly unfurloughs, and now this POC in a very wide box, almost an outside box, if you will, based on the POC lining up pretty much almost, was it 1954.05 POC current weekly new box appearing in 1954.75, previous unfair low. So we had a close above there. Not that far above there. I would call that kind of within the noise level. But anytime we get back down below 55.54, I think we could have some short candidate situations with stops above. Now, we've been as high as 65, 66 already. And I'd like to see this thing gravitate down below and get some momentum. I'm not looking at this from the long side still, so we're going to kind of keep an eye on that for what it's worth here. As we scroll down, let's just take a look at the DAX. Excuse me, I'm having problems pulling this up. And, here's the weekly situation. We don't have a lot of data compiled from the past on the December contract. This is where we're at, 93.06 unfair lows on the weekly. And on the daily, still no new information here. Again, it tells me that, we want to probably go lower on this. Here's the 240 to have something to key off of as we wait for it to pull up here. Okay, so the numbers on the 240s are 90.48 on the DAX and 88.42 down below. So what does that mean? That means that we're selling 90.48, and we're also selling breakouts below 88.42 or using those as short-term targets on the downside. Let's take a look at also something else we generally take a look at before Eric comes on. The notes, really quick. I was talking to somebody today, what's the best trade out there right now? And in my opinion, it's always looking at the notes from the long side because we've had a really, we spiked up crazy highs. Markets rallied quite a bit in the last 5 to 7 days, and the notes have just come off just a tad, really. So, what's the riskier trade? Is it riskier to try to short the S&Ps, or is it riskier to kind of hope the S&Ps come down? You were right if you were thinking like that, but the notes, therefore, should go up by default. And you've had a kind of a decent show its hand situation with the notes, and that being said, I think stops oriented on the long side, trading the 10-year, maybe not the 30-year. The 10-year I think is going to be a little more reactive sanely here on the long side with stops down below. And what am I looking at stops down below with? I'm looking at stops down below on the kind of shorter term, just to kind of be a little stingy with this. 126, 28, 29. Stops down below and hopefully hitting targets of 170, 127, 19, 20 up top, and maybe even higher if we get a stock market turn. I hear the music. We're going to be right back, and we're going to have Eric on. We're going to talk a little bit about fundamentals for a second and take a look at some of my stocks du jour today. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. I'm showing gold on my screen right now, and just reminding everybody that 1227 area was super important. We got 1228 unfair lows on our 240, and that previous profile on gold here, 1227. We talked about kind of laying off of this thing after we traversed back down below 1241. Hey, enough's enough. Let's try to regroup down here somewhere lower or buy breakouts above. So right now we're just, I think we're kind of sitting in no man's land here, and that's the situation on gold. Eric, are you with us? Hello?
Hello.
Hey, Eric, how are you today?
Good morning. Can you hear me?
Yeah, doing good. Can hear you fine.
Because I'm in New York, where all the politicians are fighting each other about who to quarantine for Ebola. I think there's 3 people up here with it, and the city is nuts. It just shows you what psychology will do. How you doing this week?
I'm doing good. I'm happy to hear from you. I know we talked a little bit this weekend about a couple of things. I've got an echo. Are you, Al? Are you hearing an echo? Excuse me. Is everybody hearing that? Okay. It must be me, Eric. I tell you what, we were talking this weekend about a couple of things, and interesting conversations, as always. What you want to just kind of get into that a little bit about what we were talking about, and then we can maybe pull up some instruments that relate to that?
Yeah, I think the trader psychology. I mean, the way you've called it. I mean, since September, on the pullback, you saved people a lot of money that paid attention, and of course the bounce. That's what markets do. So I mean, the traders, had to realize that still underlying the roadshow of earnings, where about 80% of the earnings have been in there looking good. But, of course, the adjustments, if you were to read the adjustments, you'd go blind because every earnings statement has about 30 adjustments, But the earnings season has given us the bounce, but I still think that your overall work is still fundamentally the same in terms of what's underlying here, the deflation, the oil, the other things. Now, some of the things we talked about were some industries that I think were kind of not on the radar all the time, like the railroad industry. There's been a lot of talk about that. Do you want to chat about that for a minute?
Sure.
Talk about a couple of stocks
love
there.
For everybody to hear about that. Yes.
The big thing with the railroad industry people don't understand is that Jimmy Carter deregulated the overall whole game, back in '76 in terms of, air transport, etc. But he never was able to deregulate the airlines. So he got a senator named Staggers to come in and deregulate the airlines, all right? And they got pretty much what they wanted. But since '80, airlines have been pretty much of a growth industry, but they are run by a bunch of old-time bankers, the type of guys you see in those pictures of guys sitting around the club reading the paper with the brandy and the cigars. They're not big dividend payers. They want to buy their own stock. They love the growth, but they keep playing around with the earnings. The bottom line is the rail industry is running the goods of this country, and there are some very interesting things going on in that industry right now. I'll give you a couple of examples. I mean, their full carloads are all over the place. You've got the problems, of course, with the fires in the oil, but what's happened in the United States with all that tar sand stuff coming through has made, just changed the game plan completely. Now, this week, a couple of important things. You're going to see the oil refiners decide what they're going to do at these prices, $80. Now, look, energy has been... now we've got everybody worrying about the price of energy being down. Believe me, the price of energy will go back up. They are going to continue. They're spending zillions in terms of their refining capabilities. Now, a couple of railroad stocks lately have been in the news. This one big thing that the guy named Ackman, the big hedge fund player.
Sure.
Yeah. Canadian National was his, Canadian Pacific rather, was his big play. He bought it at $40. It's $200. So he picks up the phone. He says to the president, he says, listen, you got to get some, I want to see some more money here. It's not enough that he's made what he's made, and he owns like most of the company. He says, go buy somebody, go merge with somebody. So he picks up the phone and he's talking to CSX and he's talking to Norfolk Southern and he's talking to, these people no more want to merge and get involved in that. They're doing very nicely. The railroad tycoons, and that's what I call them, they still love their own earnings of getting their shares bought back. Kansas City Southern is the one I've been watching.
We're going to go to break, Eric. Can you hold on there, and we'll pick this back up when we get back?
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Eric, can you hold your thought? 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 Can you hold your
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, welcome back to the show. Eric, do we still have you?
Yes. Yeah, you're still
Great. Sorry to cut you off. We just got these breaks that we got to deal with, and I don't forewarn you well enough, I guess. No. You were... I've got CSX on the screen. Let's take a short little break from what you were talking about. And
then check on KSU, Kansas City, Southern.
I will. Yeah. Union Pacific, I was looking at, and CSX. CSX is just literally, without even having a big pullback with the market. I mean, these are the kind of things that we really lick our lips looking for is, we broke down, obviously, this is our daily chart on CSX. And we broke down a little bit there, but, we obviously had some news, some earnings. And, then we got back above profiles. And, this is, obviously one of the stocks that you eliminate one side of the marketplace. You cannot be short this by definition. And we had go back and retest that breakout area around that 32.35. So we're trading 35.30 right now. But, fact of the matter is we've had a 20% move up in a railroad stock, Eric, in 2 weeks. So, yeah, I mean, go ahead, continue. I just wanted to kind of put that on
These are
people's radar.
worth watching. We're all trading Apple. We're trading all the fancy biotechs. We're trading the biogens. But this is a group that the hedge funds really pay attention to, and the institutions. Kansas City Southern is the only railroad company allowed to operate in Mexico. Mexico's wages are cheaper than China. Every auto company in the world is building a plant down there. The goods are flowing in and out of Mexico. KSU is the only railroad that can carry them. Plus the fact KSU does a lot of oil work regarding in this country. They've got 500 acres in Port Arthur. They've just got a big firm building a huge depository for all that oil. So Kansas City Southern, it's a $100 and some odd stock. But take a look at that one too, because from the option side there's interest, but it's just these are hedge fund, fundamentally institutional strong stocks that they are buying. They're not going to stop buying. Believe me, these stocks are going higher, and they're going to shock you when you look at them months from now or whatever. So from a trader's point of view, yeah, there's ways to scalp in and out of here. But KSU is one that I'm very fond of. You might take a look at that and see what that...
Yeah, I'm looking at it right now. I'm showing it, and it's interesting that you pointed this out. I mean, it was a relatively strong stock, in a strong market. And when we had the pullback as of the last, the 10% pullback into whatever, 7 or 8% rally in a matter of a month recently, KSU right now literally is at some kind of resistance around 120.66 from the daily and the 240. But it has rallied. It has made it almost a 10% move back up, and it's on highs again almost. But what we want to do with this, technically speaking, Eric's all fundamentally I like it. Technically speaking, we need to see a close now above 120.66. And as you notice down here, we were able to pick this thing up on a buy opportunity around 112.62. So we need to kind of see this thing get away from the middle ground, technically speaking, and then we might be off to the races again on this thing. I mean, I'm glad you pointed it out. Back in the mid to late 90s when me and you were kind of sitting in the same space for a while, it was breathtaking to try to trade the Yahoos, the other stuff that was going on back then, the internet stocks. I actually gravitated to stocks like this because it was a little less tense, a little less stressful. I mean, these are the stocks that really trend, and it's a little easier all the way around to try to trade things like this. And I'm so glad you pointed it out because it's something I'm going to keep my eye on now. I looked at you. Go ahead.
What I'm saying is, the reason I bring it up is because, there's so much hype, there's so much talk about all the, exciting parts of the game plan and the industries and the stocks and what's, Apple's going to announce, Jesus Christ, they're going to announce, I don't know how many times they're going to announce a new product. But the rails, everybody kind of says, railroad, yeah. Let me tell you, there's a lot going on in the railroad industry that's going to be changing. And the oil situation, look, a few years, not long ago, they were saying, what if Iraq oil is cut off? It'll be $200 a barrel. Now it's 80. I still think part of that game plan is to hurt Putin and hurt the Russians like they did back in 89 when they brought it down to $3-4 and Gorbachev went broke. But be that as it may, it is not going to become cheap. Believe me. We're going to see what the refiners are going to do, what the earnings are looking like.
Eric? Hello? Have we lost him? Okay. We may have lost Eric. He said maybe we can get him back, but let's kind of keep marching forward here. Eric said something interesting about Gorbachev and Gorbachev didn't go to his knee. I mean, seemingly good guy, probably was. Reagan seemed to hit it off with him. I remember all that. I'm sure a lot of you guys do too. But Gorbachev really had to kind of say uncle on a lot of levels. The Soviet Union, when oil was, $20 a barrel? Something like that? That just doesn't work for Russia. So, you're back. Cool.
I'm back. Yeah. Everybody thinks that it was the politics. It was the economics. Gorbachev couldn't compete with Star Wars. Are you kidding? They were having trouble. And the big thing, again, I say, we never really helped Russia much. We didn't send anybody from the big companies and the smart people over there to help them. Those people couldn't build a tractor and deliver it, really,
right.
Up until, 1980. I mean, there's reasons, but the things are softening up a little bit there. Things are not going to go crazy. You still have all these headlines on these hedge fund guys like Ackman, etc. One of the stocks I like, Tesla, TSLA. You've mentioned that a few times.
Yeah, I've kind of been, not that bullish on Tesla. It kind of broke down.
Right.
Before the market started breaking down, and as you know, that's kind of one of the things I look at. But yeah, you have something to say on Tesla?
The only thing I have to say, the guy that runs it, Elon Musk, he started PayPal, SpaceX. He's an entrepreneur. It's going to be the electric car leader in the country. It's just a stock to keep an eye on. I like it. I read a book about Tesla. Can I tell you a quick story? It's funny.
Sure.
You have a second? Tesla used to gather guys around him at night, and Mark Twain was one of them, and then he would take them all back to his apartment on Bleecker Street, and he'd have all these inventions, and he'd put up all he'd show electricity going through his own body at like 12,000 volts and all of this stuff, and he'd put on a real show for these people. And he was a ham in a way, while he was a genius. Alternating current, the radio, the X-rays, you name it, solar power. The guy was a genius, and he had a mat that was a vibrator. And he said, "Here's a vibrating mat I'm going to use for the medical industry. It's going to help people." So Mark Twain said, "Oh, I've got to stand on that. I want to see how that feels." So Tesla said, "Okay, you try it." So he's got a.
We lose Eric again? Possibly. Okay, we've lost him. Maybe we can get him back. But nice anecdote from Eric there. Tesla was a character. I don't know if it was the Waldorf Astoria. I think it was the New Yorker, wasn't it? It's good looking at that. He lived at the New Yorker, room 31, something like that. We'll have to check on that. Anyway, Tesla, while we're talking about it, just technically speaking, 242.15 is that weekly unfurlough that we just have to get back above, in my opinion. In my opinion, a close above there would be okay to get long Tesla again. Now, we've obviously, on a shorter-term basis, been able to kind of, look at some things possibly from the long side, but really 242, 241, weekly unfair highs, weekly unfair lows, daily unfair highs. We're going to have to traverse back above there for me to get, really excited about getting long Tesla again. And I'm not exactly too excited about it because it's kind of shown its hand lately. So they say. Somebody saying room 31, area 51 in the den about Tesla. But it's kind of interesting. Tesla and his buddies, Mark Twain, and a couple of, that's a heck of a gathering. Anyway. A couple of things I want to look at.
Back,
go ahead, Eric.
I'll sign off with the fact that, go ahead.
Go ahead.
I'm just going to sign off with that Mark Twain went to the bathroom in his white suit. And, Tesla is an amazing situation if anybody wants to read anything about him. Right. Go ahead. You tell me what you want to chat about that for a second.
Actually,
you there?
Yeah, I'm here. But actually... Well, anyway, that the kind of the fight between Tesla and Thomas Edison on the what type of current was going to be accepted. It's amazing how Tesla ended up in full blown, not poverty, but just kind of missed the boat monetarily. But I don't think he cared about that, and Edison kind of really climbed the ladder with the wrong.
He never cared. He never cared about money.
Yeah,
you're right.
Yeah,
and you know what? We see that every day today in the technology and the biotechs with the scientists, with the people, even in areas like, the genius work that you're putting out. I sometimes get frustrated a little bit. I mean, what you're doing, look, if people had followed the September, like I listened to you in the middle of September, I said, you see something that's really wrong here. Before, everybody was kind of happy, the summer is over almost, boom, we got hit hard. 11%, 12%. I mean, he saved a lot of people money, and keeping your eye on the ball now is critical. And business is business. Most people that are the real geniuses, like the guy running Tesla right now, I don't think he cares much about money, although he's worth he's worth about $10 billion. But
not a small
if you look at the ownership, no, not a small sum at all. I mean, it's amazing. I mean, Bloomberg, give an example. Our friend Bloomberg, he never gave anything away. But here's a guy who knew what he had, and he was a very smart businessman. Watching the way some of these people operate is just amazing to me. Like you said, Tesla he died broke. I mean, he died. Jesse Livermore in the bathroom at Grand Central Station died.
That's true.
Tesla.
That's true.
Biggest problem Tesla had was he had a fire in his goddamn apartment in Bleecker Street when he was a younger man. And
I think we lost Eric again. Eric, are you back? Okay. I tell you what, Eric mentioned something too. Just while there's not a lot of news out today. We're just going to, keep talking about some of the things off the grid as far as technicals go. I've got Amazon right now up. Amazon got its butt beat pretty good here. 294.65 new 240 boxes appeared finally. We talked about waiting patiently until we had some new information on Amazon. 294.65, unfair high 281.36. So those are kind of the rattle around sell resistance. This is called supply area up top here, guys, and down below 281.36. Eric mentioned something too about Bloomberg. Michael Bloomberg, obviously an astute businessman. I think he's going a little overboard with some of the other things he's doing. It's my opinion. I'm probably wrong. But it's amazing. Once we started dealing with Bloomberg, the company, doing events with them, we have a lot of our information on Bloomberg. It's amazing to understand what the culture of Bloomberg is. And talking about Bloomberg and success and kind of, counting the pennies, so to speak, they have a huge high turnover rate. The average salesperson for Bloomberg is only there for 18 months. They either meet a hedge fund when they're trying to sell terminals and try to get a job somewhere else, or it's just amazing. They in Asia, all the salespeople meet in Hong Kong. No matter where they're based out of, they're all based out of Hong Kong, and then they go and stay in a hotel for 4 nights every week. Singapore, Beijing, Shanghai, Jakarta, the whole 9 yards. And it's interesting to watch how that wheel turns, and they don't, in my opinion, their salaries are competitive and stuff like that. But he keeps a real hardcore look on performance, and if you don't perform, hasta luego, so and that's endemic in the whole place. I've seen people that have been there for 10 years just, hey, the game's changing, your department, we're doing this, and here's the door. It is truly amazing. There's not a lot of people that have worked there for a long time. Not to talk bad about it, but there's, this just that's the way he runs his company, and it's about performance over there. So anyway, not to get too far off, here we go. Looked at Amazon. I had a couple of things written down here. LAKE. Let's take a look at that. This is something that obviously is extremely news-driven right now. Here's the daily situation. It's the darling of some of the stock twits world. And I just wanted to point out, if you're going to trade something like this, you might have a decent buy point at 10.29 and 23.13 way up top. So, again, that was kind of the... We'll come back and speak briefly about this and cover a couple of things before the last segment and obviously the opening of the stock market today. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show, and thank you, Eric, for bringing some color to the morning hour here on TFNN. Here's S&P 500 futures, 1054.55. This is where we're at. We're trading about 1954.55. We're trading about 1951 right now. That's the big number. That was kind of the weekly long-term breakdown, and obviously that may become former support, now resistance. We got a little noise above there, and if you've been watching this show, I've been trying to stay with the concept of these are the stocks, by the way, that Scanner picks out as on a daily situation, stocks that have shown their hand, showed their butt, however you want to look at it, of being the weaker ones. Target, these are the usual suspects of the earnings nightmares lately. Coca-Cola, Intel not looking too good here, Newmont Mining, and Amazon, obviously. IBM should be on here, and there it is, IBM. So, we're picking out weak stocks. Hopefully the market will come back. It's better to short weak stocks in a strong market. And unbelievably, those were the only stocks in the S&P 500, which is scary, that are still trading below profiles on the daily. But let's take a look at IBM really quick. And this was the only Dow stock down in the year 2013. And that's why I think Tom, a couple other folks on the TFNN network have just, I talked about 192.50 being possible all-time highs for this, never going above ever again. We did go above slightly and came back down below in like 2 days. But this is not the type of action you want to see on a stock that may bounce. There is no dead cat V looking thing down here. This is a gathering itself and some shares changing hands to possibly move lower, even though there's nothing to key off of here on the daily. I'm going to pull up our 240, and we're going to kind of blow this up a little bit. We're still trading below 240 profiles, and 162.51 now is going to be the leverage point for me on a short-term basis for this to head lower. And to be honest with you guys, if we get any help with the S&Ps, I know this thing's come down pretty hard pretty quickly, but again, you're looking for candidates. You could take the other side of the coin, look at this, as some stocks have been up too high. I usually don't look at things like that because I can get into trouble doing that. I want to find weak pieces of that are probably going to fall faster and less painfully, if we're wrong, go up when the market's on serious moves up like the stock market has been lately. Let's take a look really quick at Google. Is that the right symbol? Yeah. This is something, we got about a minute left here now. This is something that, we kind of rallied late in the game on the stock market rally with Google. We've come into the inflection point. We didn't want to be near there. We've come off of it, 552.50 top, and this morning we're trading about 547. So I'm looking at Google as a short, and I'm looking at putting stops above there. And if they get hit, they get hit. I'm trading it relatively light. And I'm hoping we can go back and possibly revisit some lower numbers, maybe 25 points lower into 524. And I'm basing that on looking at the scanner and taking a look at the breadth situation on long term, which is still negative, 38 versus 60. Put in some new numbers there. I'll explain that in a next show. But again, the long-term breadth is still negative. The daily's obviously in the 240s and the 60, obviously positive. But this is the stronger signal. Stay tuned, guys. Steve Rhodes is next. We'll be back again tomorrow. Have a good day's trading.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.